Hello and welcome to our second season of Harbourside Chats. I am Governor John Rolle of the Central Bank of the Bahamas, and today we're filming on the margins of the second biannual Macroeconomic Caribbean Conference at the Atlantis Resort on Paradise Island. And I'm very honored to have as my guest today Dr. John Williams. He's the President and CEO of the Federal Reserve Bank of New York, as we chat about monetary policy in a digital age. And now, John is a career central banker. Before joining the New York Fed in 2018, he was the President and CEO of the San Francisco Fed, which he joined in 2002. And he began his career as an economist at the Federal Reserve Board of Governors, but he also served in roles at the White House on the Council of Economic Advisors, and he also has been associated with Stanford University's Graduate School of Business. So not only has Mr. Williams had an extensive career in central banking at the Federal Reserve, but he's made invaluable contributions to the pool of research on monetary policy under uncertainty, business cycles and innovations. And he is a research associate at the Center for Applied Macroeconomic Analysis. So I know that our viewers will really benefit from the insights and perspectives that you have to offer. So John, thank you and welcome for being here.
Well, great. It's great to have been looking forward to having this conversation. So
let's just talk a little bit quickly about your background in getting to this point. We talked about you being with the San Francisco Federal Reserve Bank and now with the New York Fed. How did your experience differ in moving through those organizations?
Well, I've been, as you mentioned, I guess I am a career central banker. You're right. So I've been in the Federal Reserve now for 30 years, and first in Washington, San Francisco, now New York. And there are some differences. I'll talk about that. But what's more striking is the things that are common. In the Federal Reserve, as in central banks around the world, we have dedicated employees who are committed to our mission. And whether in the Fed's case, it's maximum employment and price stability, but more broadly, just people who come to work every day thinking, what can I do to contribute to our mission and serve the American people and, quite honestly, help having a strong economy and financial system. And that's one of the things that I've really appreciate throughout my career is obviously the important work we do, but also the people who I get to work with, both in the Fed and internationally. So that is common to everywhere I've worked. What's different coming from San Francisco to New York? Well, one is the weather. Okay, that is different. I have to admit that. Especially, I feel that in the middle of winter. Can be quite cold in New York. I think that the thing that's really different for in the Federal Reserve System is the New York Fed is really responsible in two areas have responsibilities in two areas that are different than some of the other reserve banks. So one is we carry out the implementation of monetary policy. So in the New York Fed, we manage the system open market account, which is basically the balance sheet of the Federal Reserve, on behalf of the Federal Open Market Committee. So we are working on behalf of the entire Federal Reserve System in carrying out the monetary policy decisions of the Federal Open Market Committee. So that's a really important responsibility. With it comes a lot of monitoring what's going on in financial markets, both domestically and around the world, really doing a lot of analysis and studies about what are the kind of conditions in markets, but also what are some of the changes that are happening, the evolution of financial markets here and abroad, and what implications those have for what we do. And then, of course, a lot of work on making sure that the implementation of monetary policy is successful, effective, under a wide variety of circumstances. Now, that's been tested a number of times in the financial crisis and during the pandemic, and to this day is making sure that we're on every single day we're ready to carry out our really important responsibilities. So that's one thing that's a different responsibility from New York than San Francisco. Mm-hmm. The second is really the international engagement. The New York Fed, I and many of my colleagues are very actively involved in meeting with and regularly engaging with central bank leaders from around the world, either through the Bank for International Settlements, Financial Stability Board, or other forums where we get together, share information, perspectives, have conferences like this that
Yes.
you're hosting. Yeah. So I did that earlier in my career, of course, but now it's I would say it's a much more central part of my job is, really engaging and learning from my colleagues from around the world as we carry out our own policies, our own actions, but recognizing, importantly, we are part of a global economy. We're part of a global financial system, and everything we do, everything that happens around the world, that affects all of us. And that's been also an important part of my job, but also a very rewarding part of my job because you learn so much in working together with my colleagues around the world.
Oh, thank you. I know that, you mentioned the international aspect of the New York Federal Reserve. And I can identify with that because I know all of the training and exposure that you provide for central bankers from around the world in terms of understanding the US system. But what is interesting about the United States that I don't think most people think about is that it's a system. The Federal Reserve Bank is a system. So it's not just one bank. And New York is, and we mentioned San Francisco, there are 2 out of 12. And so this is different from what we have in most countries. And at New York, as you mentioned, you are on the front line of implementing monetary policy. How does the system work in terms of the other Federal Reserve banks?
Right. No, you're absolutely right. It is a very unique institution. It's now 111 years old, and it is a very federated system. So we have 12 reserve banks, across the country, everywhere from, San Francisco, we mentioned Dallas, Atlanta, Cleveland, New York, Boston, around the country. And then we have the Board of Governors, which is the headquarters and the part of the federal government structure, if you will, part of it. So it is a federated system, like so much in the United States, where we've always had a federated system, but it is unique, as you pointed out, in how we do things. So if you think about it, what happens in the 12 reserve banks historically has had a very operational aspect to it. So going back to clearing payments or processing payments, whether currency, check, other kinds of payments between banks. So the Federal Reserve banks have historically carried those activities out, not the Board of Governors in Washington. So that continues to be a really important area for us to do. We have the staff who supervise the financial institutions in the United States. That's carried out at the reserve banks under the direction of the Board of Governors in Washington. We also all have our economists who support each president and the teams who help advise us in preparation for monetary policy meetings. But a lot of again, I would say one thing that's distinct is the operational parts of carrying out the Federal Reserve's mission, whether in the payment space, whether it's in the supervision of financial institutions and other areas. A lot of that's happening really in the reserve banks. And the question you asked, which is really an interesting question for all of us, is well, how do we all work together? And away from monetary policy is we look at ourselves as being both things. One is part of a Federal Reserve system. We're serving the American public as together when we work together. But each of us in the reserve banks leads our own institution, which means we have a strong base in our districts. And we do a lot of work to meet with people and conduct outreach and engagement with the leaders, whether business leaders in banking, in communities, government officials, to really understand what's happening in our part of the country. So again, we kind of have to wear 2 hats. One is how do we work together as a Federal Reserve system and a lot of the strategic initiatives, but how do we really make sure we stay grounded in our various regions? Now, last thing I'll say on this is, but when we get back together in Washington, we're not representing our regions. We're not saying what's good for New York, what's good for California, what's good for Texas. We're coming together and we are saying what's good for our country, what's good for achieving our goals. And that's one of the things that's one of our great strengths is people just very focused on let's make the best decisions we can. We come from different regions. We have different, viewpoints, different perspectives. That's a strength. And it helps us together, I think, make the best decisions we can as a team.
So, being the CEO of the New York Fed has to be a time-consuming job in itself. But you're also an economist, and you're still doing a lot of research. How do you do it, and how important is that?
Well, thank you for asking this, because I get asked this by a lot of, especially younger colleagues, or maybe the intern programs we have, and people say, how do you manage to do this? And I said, you should never ask me about how I manage work and life, because I'm not the role model for that. I love my job, obviously. I love doing economic research. There's so many questions in economics that we don't know the answer to, and there's so many brilliant people working on that, but I still enjoy working on that. When do I do it? The honest question is on the weekend, maybe even on vacation sometimes, work on a project. But my secret for success is I've got these great colleagues who I get to work with, who, I learn so much from. We do joint projects. One of the things in the Federal Reserve is you see a lot of co-authored projects, a lot of collaboration. So I know that I guess I should speak freely. I think my co-authors know that I'm pretty busy, but we're able to work together and continue that work. So the answer really is collaborate with great colleagues on projects, squeeze out the time I can find in the weekends and in between. But to me, it's a motivator. It's a question I ask a lot of people. What excites you about your job? And I love so many aspects of it. But the ability to find a little bit of time to continue to think about these questions like we're talking about at this very conference. Every single presentation here is really posing questions that we don't know the answer to. It's not people come and say, I know the answer. There are things about how do we communicate it more effectively as central bankers. Well, we're always trying to learn from that. Or we're always thinking about how do people form expectations. Well, we don't know the answer. We're trying to understand it.
I was not going to ask you any questions about central bank communication, but I'm glad you touched upon it, because there's so much more transparency around the process, even down to, in the case of the US, you publish your Monetary Policy Committee minutes. And now we're using artificial intelligence a lot more to dissect these reports and stuff. Is there a concern that the entire process is going to become scripted so that, we get the kind of results through the AI models that we're trying to influence?
Well, I hope not. It's a great question, because there's no, people are following it. The Federal Reserve, the speeches by the chair, the policy, statements we put out, everything that goes out is run through every possible algorithm and everything to figure out what does it mean. So that's a reality that we work in. So we need to be thoughtful. We need to be careful. And something that I remember, Janet Yellen, when she was chair of the FOMC, chair of the Fed, she would highlight, our goal is not just transparency, it's clarity.
Okay.
And I think that's a really important thing that, we want to be transparent. I'm a huge proponent of transparency, but transparency towards the goal of making our policy more easily understood, to help markets and people in our economies, our countries, to understand what we're doing and why. Now, that's not easy. It's not easy at all. But I think those are very important. I go back to my career, 30 years, and a few months before I joined the Federal Reserve back then, that was when Chair Greenspan first introduced a policy statement that explicitly said what the decision of the committee was. Before that, there was no official policy statement coming out of the meeting. And since then, under Chairman Greenspan's leadership, I should point out, he actually started the ball rolling on greater transparency at the Fed. Obviously, Chairman Bernanke, Yellen, and Powell have continued that throughout my career. And it's really been, I think it's accomplished a lot of important things. I think it's about people better understanding all the different aspects of how we're thinking about things, the uncertainties that we face, how we're thinking about the decisions, why we're making the decisions, importantly, what are our goals, what we're trying to achieve. So I think all of these movements towards greater transparency and directed to greater clarity have been beneficial. I think it served us very well during the pandemic period, when there's a very turbulent period in the U.S. economy and around the world. The people had a good understanding of what we were doing and why. And so I think that is very important. As new technology is used, I think it would be unfortunate if we thought that the right way to do that is to somehow be scripted in your words or somehow try to just minimize our communication because for concerns about what the algorithm will say. I think it just tells us once again that we need to be focused, help people understand what is it we're trying to do, what's the information that is guiding our decisions, and how we're going to adapt to changing circumstances as we carry out our policies.
Now, one of the very interesting presentation at this conference was trying to understand how we as individuals go about making decisions and even assessing whether we've made the right or the best decisions. And that comes down to understanding what's going on. And then from a central banking perspective, a part of what we're doing is trying to get people to form expectations and to act upon them, but to be on the right track when they form those expectations. When I look at that from the Bahamas' perspective, everything that matters in this economy has some significant link or dependence on the United States. So look at the planning process for individual households and businesses. They're all looking at what's going on in the US and trying to form expectations about what's happening here. What are some of the key, trends and indicators that you think are important for the average person in the economy to be looking at to understand what's going on?
Well, I think that, that's actually becoming a harder question to answer because there's so much information available, right? In the past we would, I would say you look at our mandates or maximum employment price stability, the unemployment rate, the inflation rate, those are kind of some of the kind of key indicators. But today there's just such a wealth of data and information available, and weighing that and making sense of all that is hard. It's our job to do that. I think that, if I thought about success from a central bank point of view, is I would love it if people were not worrying about inflation, that they were thinking, like former Chairman Greenspan said, that inflation's low and stable. It's not something that people are spending a lot of time worrying about. Now, I recognize that the past 5 years have not been like that, and we need to absolutely restore price stability and make sure that we can get back to that after the extraordinary events of the pandemic and everything around that. But I do think that there's the point I'm really making is we should make our jobs in ways that make it easier for people to do that. And in terms of the broadest indicators, I do think it really is about how strong is for us is how strong is the labor market relative to kind of norms, or what's the maximum employment relative to what can be accomplished, and it's looking at those key things, not so much the million other things. But again, I feel like one of the things I would define success as for us as central bankers in the U.S. is that despite the high inflation, persistently high inflation we saw in the last few years, we get back to something that looks more like what we had before. Yeah. This is not something that people worried about. Now, my kids, I'll say, I got two sons, late 20s, 30 years old, and they had never seen inflation in their life. So when I was talking about inflation and the importance of price stability before the pandemic, they were kind of wondering why I was so fixated on that, because what's inflation? Well, I think what we've seen now is that everybody understands that high inflation is a problem. It's a problem for everybody, but it's especially a problem for those who are least able to kind of protect themselves from it. And that's often the lower or moderate income families. So that's why I think it's our job to get that price stability back restored.
So when the Bahamian business person looks at the United States, they want to know, are Americans gonna go on vacation more this year? And do I have any opportunity of adjusting my price in a favorable direction? What signals can they draw on to help decipher their issue?
Well, I'm not in that business, so I probably shouldn't be giving advice to the professionals in that business, because I think they know very well. But obviously, one of the things that you see, in the post-pandemic era is tourism has increased dramatically, and that's really important. Not just here, but in other places. And consumers are thinking about very much the cost of things. I mean, after the big price increases of 21, 22, and into 23, I think American consumers are very price sensitive. Now, they have incomes. Our economy has been doing very well. Job growth has been solid. Real earnings growth has been very good. So I think that's a good foundation. But I think people are price sensitive. Again, I don't know. Again, I'm not running a business here, but I think that is something that you're seeing in our economy. The other thing that obviously fits into all of this is that people are thinking about what their different kind of options are, and in terms of going different places, and we see that affected by other factors such as the value of the dollar and things like that.
Good. So I'll talk one more question about general economics, and then maybe talk a little bit about some aspect of the artificial intelligence and other issues in the U.S. But in the Bahamas and the Caribbean, a very important question is how we get our potential growth rates higher for a range of reasons. I know in the U.S., when we look at where the outlook and the projections are, we tend to see in the more recent outlook, average growth projection for the U.S. in the 2% range. In our case, we are very concerned about how we increase potential growth. Is the U.S. preoccupied on any level in terms of what the potential growth rate should be for the U.S.?
Well, I think it's so important, right? Because if you think about what is the economy's potential? And I think this word potential has a very broad meaning. Like, what can we accomplish? What can we do? It's really going to be driven, first and foremost by productivity growth, the ability of the people in the country to be more productive, to produce more, to benefit from higher earnings as part of that. So I think productivity is a huge factor. Obviously, other factors that make it easier for labor force growth to grow, affect that as well. But I think on productivity is where we've seen, in times of the U.S. where potential growth has been stronger versus not as strong. I mean, productivity's kind of growth swings have been really important. We've seen some really strong data in productivity growth in the U.S. over the past few years, surprisingly strong. Well, I can't predict the future, but that's been good. I think it gets back to kind of core economics. It's the word investment. It's investment in people. That's education, training, all of that. It's investments in businesses, in capital, in innovation, new technologies and things. And it's obviously businesses and investments in infrastructure and things that help improve the ability of a country to produce. So I think these are the big drivers of productivity over the longer run. And I know we're going to come back to AI, but I think the broader point is anything that, when we're able to create a stronger productivity that's broad-based and that people benefit from, that's going to be the thing that drives potential growth. And coming out of the pandemic, we had in the U.S. we had severe labor shortages for a while. A lot of businesses saw that they needed to find ways to kind of figure out how are we going to continue to meet demand and use more innovative approaches and technologies. And I think that some of that's been driving some of the improvements. I do think AI, though, we're going to talk about, is the next kind of frontier in thinking about that.
Yeah. No, you did research, you co-authored research, I think maybe 2 decades ago, on how technology could impact, wages and in terms of what the long run impact would be and prices. And, these research typically look at things in terms of something suddenly happening and how the economy's response. And it almost feels like with artificial intelligence, you have one of those sudden change where it's more noticeable than some of the other ways in which technology shifts. Do you think that with artificial intelligence, we will see some of the same type of expected shifts in terms of how wages and prices should be responding?
So I think so. Now, you're asking me qualitatively, I think so. Quantitatively, I think that's the big question. How big of an effect is AI going to be for productivity, for wages? The effects it has on inflation and the economy and jobs is not clear right now. I do think that if you think about it, one way to think about AI is that we've been using AI for decades now.
Yes.
If you do a Google search or another search, these are always been using very innovative technologies to help do these things. Similarly with machine learning, with a lot of this has been going on. Automation has been going on for decades. AI is, I think, seen by many now as an acceleration of that process.
One final question, being mindful of our time. Financial inclusion is a big deal in many countries, and I know, and I've heard, I think, Chairman Powell and others speak about it in the U.S. context. But what are the issues that the Fed see as important insofar as financial inclusion is concerned in the U.S.?
Well, it is a huge issue in the U.S. The unbanked and the underbanked in the U.S. A lot of people don't have access to banking accounts or other kind of accounts. So I think there's a number of issues. One is obviously cost issues, but I think that where we're seeing a lot of activity is really around how can new technologies or new business models or things like that help with that? Is there ways to, as we've seen everybody else learn to use their phone for everything, are there ways to simplify and reduce the cost for people who honestly, may not have a huge amount of money that they're trying to save or invest, or just using it for payments and for things like that? It's been a huge focus also internationally, as you know, is about cross-border payments as well. Yes. Because in the United States and many countries, people are sending money back to families abroad. So, I think there's just the focus here is, are there ways that technology can help reduce that cost and increase the availability? So in the New York Fed, we do a lot of engagement with the industry about how is that working, what's working well. But it is, I think it's got to be a longer term issue where we just need to continue to see where again technologies can make this easier to do, because it's been a problem for decades.
Yeah, and it's definitely an issue for us, particularly in terms of understanding the kind of direct support that the central bank can provide in terms of building out the infrastructure, as well as looking at some of the policy issues around technology, and even do people or can people afford the data in many cases, cellular data or otherwise, to do transactions digitally. So they're very important issues, I think, that we have to continue to work with.
If I can, for just 10 seconds, I think this is a really important point you're making, because it's not just about access to banking, but we have, in the United States, we have issues about access to broadband internet. We have issues about access to cellular networks in our country. Even if you can afford it, lots of parts of our country don't have strong access to that, or it's very expensive. And those are all interconnected, because sometimes people say, "Oh yeah, well, we're going to develop an app." Well, if you can't get on the internet, or you don't have cell service and stuff like that, it's not going to help.
So, John, President Williams, I want to thank you for this very excellent discussion, and also for your very valuable contribution to our conference. It has really been a pleasure having you with us in the Bahamas, and I really thank you again for being here.
Great. Yes. Thank you.
Yes. So thanks also to our audience for joining us. Episodes of Harbourside Chat, just as a reminder, they are available on our social media page. We're also continuing our collaboration with ZNS, so that these discussions will be aired on ZNS, and we continue to work with Guardian Radio so that people can hear our conversations. If you want to send us any comments or suggestions, remember our email, harboursidechat, that's harboursidechat@centralbankbahamas.com. So thank you, and we look forward to seeing you during our next episode.